Good day, everyone. Thanks for joining us here in the charts. Tune into the Market Beast edition. Fellow compadre speaking. We're going over a request. VST is the instrument symbol. VISTRA CORP. Thank you for sending it over. We found a pattern. We have the buyer's obligation level, seller's obligation level. I think it's pretty interesting. We're going to start from the beginning of time. I'm going to give you my speculative assessment of what I think could take place or what is the practical next move for this market. So stick around to the end. If loyal subscribers, welcome back. If you're new, consider joining us. Let's dive right into the charts here, shall we? All right, so today's April the 3rd, 2021, and the previous close of the stock is going to be $17.72. It closed positive approximately 0.2% for the day. All right, welcome back, everyone. Hope you guys are doing well. ASMR, interesting analysis. I'm pretty excited about this. Here's what I found on the pattern. That's it. Really simple. I'm going to explain everything. Ladies and gentlemen, what you are witnessing on the screen is called a dome formation, okay? And the highest point that I can identify on, I'm actually measuring the wicks, is actually $27.96. This HP stands for the highest point or highest price, whichever one. And the $24.20 represents the lower high. So right now, the sellers have an obligation, and their obligation is to break below the previous level of support here. So let's just go ahead and explain what the lower numbers are. I think you guys get it. The $11.30 is the lowest price or lowest point, either one. And of course, the $16.20 is the higher low with a question mark. Now, I put a question mark there because I'm not sure how the price development is going to respond over the course of the next days or weeks. But the price level that I just put on the screen in terms of the candles bodies is what we go over on the channel frequently. We actually go over support, resistance, and patterns, mostly. But we also focus on the candles bodies to understand a previous level of support and things of that nature, and of course, ranges and things like that. So let's just erase the screen circle for now. The line that I just put on the chart is $16.70. That's the most recent low that I can record in terms of the weekly candles here. The price is probably in its best interest to just kind of, I think it's better for it to just kind of get boring and start to consolidate sideways. And the reason that I say that is because I think it's practical for it to do that in preparation to break out. Let's all be on the same page in terms of how long the price action has been stuck within this dome formation. Assuming that it's within this dome formation, I think it's pretty clear in terms of the candles bodies and wicks from the weekly. But back in May the 8th, 2017, at a price of about $15, the price has always been within this dome. So in terms of what I understand with price action, as it's been consolidating within this dome formation, all of the price activity that's going on in this area, of course, it actually dipped below that line there if you've seen that. All the price activity that's going on within this dome formation can be considered consolidation in my book, okay? And of course, the more consolidating, the more aggressive the breakout will be when it eventually breaks out. Obviously, in the bullish case, it would be a break up above the dome formation, okay, eventually. And of course, if it breaks down, the seller's obligation is to break the price down below the $14.59 level that I just circled right there, okay? So you basically have the seller's obligation to the most recent. I realize we said the low here, but remember the seller's obligation is basically to step into the market and continue the trajectory to the downside and basically make lower highs and lower lows. And right now the market is up against a lower high. Okay, so right now obviously the seller's obligation is to continue the momentum to the downside and at a very minimum break down below the previous level of support from a candle's body's perspective. Okay, and again, that's at about $14.67. Okay, do I think that's going to happen? I think the market is in a position right now, again, as I was explaining over here in this area, from the weekly candles. So I'm just going to stretch out an area, something like this, and we're going to figure out a time frame that I think is the most practical move. Now, this isn't guaranteed, so if it like blasts off next week, guys, no, I didn't get it wrong. The way that I look at price action in terms of understanding what could take place next and what's the healthy case scenario, I think the healthy case scenario for this price action is to do some sort of sideways consolidation from the weekly candles bodies that I can identify here, which is currently at about 1674 at the low, and of course the high is about 1850. Just do a sideways consolidation in preparation to move higher, not guaranteed to move higher, of course. And then of course, once the price activity has extended all the way to the right of this kind of rectangular consolidation range, we should see some sort of breakout to the upside in the bullish case, okay, which of course is not guaranteed, October the 4th, 2021, and it could even extend as low as, which it never really gets this tight up in a pattern, but be open to that taking place, okay? It's possible. Let's see, the time is November the 9th to November the 29th, 2021. So if the price actually could stay within that rectangular range that we just put on the chart, and it actually breaks to the upside, the buyer's obligation is to break the price above $23.10, and that would be represented at a higher high than the most recent high in the price action. Okay, again, on the channel, what we go over is higher highs and higher lows to verify an uptrend. So if we kind of start here at about just below 1450, the price went up, made a high, down, higher low, up, higher high, and assuming, that it can hold this level here, then it's likely it will, no, it's not likely. It's the buyer's obligation to make a higher high, again, above $23.50, okay? So that's pretty much all I have for this. In terms of the price action, again, being stuck within this dome formation, I think this is healthy as long as the lows can be respected at about $14.67. I'm going to consider all of this price activity that's taking place within this dome formation as consolidation. So let's just really get a really quick measurement on how much time the price action has been consolidating from the beginning of time all the way over to present day. Okay, so we'll just pull out our ruler and we'll see how much time it's been consolidating approximately. Let's see if we can get a really quick number for you guys, and that's going to be approximately 1421, so 1,421 days of consolidating in preparation to break the price out. Remember, breakouts consist of either direction. The floor here, or the level that the sellers need to break down, I can't say it's the floor because, of course, floor, it can also break, right? We can say it's a floor. And again, 1471, guys. So if the sellers have been consolidating within this entire range, it will break down below 1450. That would be a pretty aggressive move to the downside, guys. But be mindful, or just understand that if the price does break down, I look for weekly candles to close below specific levels, okay? So in that case, if it does break down to the downside and you see a weekly candle closing below 1461, then it's likely the sellers are making an attempt to break the price down and fulfill their obligation. That is their obligation as sellers to continue the momentum to the downside, okay? And I realize this number here says 1130, guys, but remember, I'm just measuring the wick of the candles here. So that's pretty much all I have for you guys. I'd say that the most practical, in summary here, I think it's in the best interest for the buyers to just simply find a floor, the most recent floor, or the lower level rather, right? $16.71 approximately, and just consolidate sideways and get like really boring. Because I'm not gonna say I think, if there's any sudden movements in this market and explodes to the upside, it must stay above the inverted dome formation. Otherwise, the sellers are going to continue to control the price within the dome formation. I can't make that up. The price has been within this dome formation ever since the beginning of time, and they have full control of the price. So I say it's in the best interest. Sideways consolidation for the buyers. That's all I have, guys. Hopefully you enjoyed that. Leave an appropriate thumb just below the video there if you enjoyed the content for the YouTube algorithm. Again, thank you for sending over the request. If you guys are new, before you go, we'd like to send you information on the alternative markets if you're into Bitcoin and altcoins. So, of course, subscribe with us, and we'll send you that information, okay? So take care of yourselves, protect your portfolios, execute your strategies. We're going to talk soon, and bye for now.